Welcome to Behind the Title, the official podcast of Trilogy and Baldacci Real Estate Closing Services. I'm one of your hosts, Bobbie Grenier, and since we are doing real estate in real time, my co-host, Jessica Mung, has been called into the closing room, so unfortunately will not be able to join us today, but I promise you she will be back for future episodes. So I have a question for you. What do you really know about FIRPTA? And before you click out of this episode and think, I don't need to know about FIRPTA, if you are a real estate professional, you need to listen to this episode all the way through. I have invited Julie Lepore from Total FIRPTA to come on and talk to us. She is going to not only explain to us what FIRPTA is, why you need to know, and she's flipping the script on how we look at FIRPTA with every single real estate transaction. Welcome, Julie. Thank you so much for coming on the podcast today. I heard you speak last fall at the First American Title Seminar, and I'm not going to lie, when I saw FIRPTA on the schedule, I thought, oh boy, this is going to be dry. But you did an amazing job to be engaging and really teach us more about FIRPTA, which I think industry-wide is a necessity. So I'm happy that you're here to speak with us.
Thanks, Bobbie. It's nice to be here.
So can you tell us a little bit about yourself and also about your company?
Absolutely. So I am Julie Lepore. I'm one of the owners here at Total FIRPTA. I own the company with my husband and business partner. And I have been doing FIRPTA strictly FIRPTA for 14 years. I have a background in title, real estate, mortgage, all real estate related. And somehow they've all culminated into this perfect position for me to be able to provide these services to the industry that I've known basically my whole life. So we work with foreign sellers across the globe, helping them through this process, helping them to apply for tax numbers, handling all the filing requirements, filing tax returns. And then we also work with buyers too, the buyers that have to purchase from these sellers that are lost and clueless and need some guidance. We work with them as well. So our goal is just to make this process really easy, really transparent, and smooth.
Let's start from the very beginning. We'll keep it very simple. A lot of real estate agents listen to this podcast. So when an agent hears FIRPTA, what does it actually mean?
So FIRPTA stands for the Foreign Investment in Real Property Tax Act. It came out around the 80s, and it's a withholding tax. It's a way for the government to ensure that the tax will be paid. So it forces the buyer, who's also known as the withholding agent, to withhold up to 15% of the gross sales price when and if their seller is classified as a foreign person for tax purposes.
Why should this be on the radar of real estate agents as they're speaking with their sellers?
I think what real estate agents don't realize is that every transaction that they are involved in is subject to FIRPTA first, right? So if they go into it thinking, okay, we need to talk about FIRPTA, the sale is subject to FIRPTA, the seller could be foreign, and they just do it automatically on every transaction that they're involved in, I think that's really the only opportunity that we'll be able to do FIRPTA differently, assuming that it applies, and then figuring out if we can utilize one of the exceptions to get out of it.
Are there any early red flags that agents should be watching for that might indicate FIRPTA applies to their transaction?
Early red flags. So I don't mean to be picky, and I don't want to pick on you, but I get nervous about using the word red flags when we're trying to determine, if FIRPTA applies, because really, if FIRPTA applies, it's because our seller is foreign. And so to say red flag kind of indicates that, there's danger, or we need to be worried, or we need to be nervous, or, it's going to be a big mess. And it really doesn't have to be like that. So I'm going to change the word red flags to clues. And so the clues that we look for, gosh, I don't even like the word clues now that I'm thinking about it, because we can't really assume anything, other than FIRPTA applies. So really the questions need to be really direct when it comes to working with every seller. So as a real estate agent, you have to be really careful how you approach sellers, and whatever you ask one seller, you have to ask all, right? Because we don't want to get into an area where we can be accused of discriminating. Whatever your questions are, they need to be consistent. So when I work with real estate agents, I encourage them to add a page to their listing presentation or add a paragraph to their spiel or however it is that they get in front of these sellers so that they're talking about FIRPTA every single time with every single client. I had a, I don't mean to segue, but I had a title company one time here in Cape Coral that called me and they're like, "Oh, Julie, we need your help. Our sellers are foreign and we have to apply for tax numbers and can you help us?" And I said, "Yeah, absolutely. When's the closing?" And she was like, "Oh, well, it's right now." And I was like, "Right now? What do you mean it's right now? Like, how did you not know that your sellers were foreign?" And her response was, "They didn't sound foreign." Well, they didn't sound foreign, so I didn't know. And so to me, that is the absolute worst way to find out if FIRPTA applies, right? And so how do we know when FIRPTA applies? So FIRPTA applies if your seller is not a U.S. citizen, if they don't have a green card, if they're not living in the United States and classified as a resident, then the only category of people left is that of a non-resident. And a non-resident is someone who doesn't live in the United States, they're not a citizen. That's who FIRPTA applies to. So you have to be careful. Well, not really careful, but you want to be respectful of how you approach that situation because you don't want to go around asking for, passports and birth certificates. So there's always going to be a polite way to open up the lines of communication with the seller where you can comfortably have that conversation with them without overstepping your boundaries into like an intrusive type of conversation. So if you want clues, your clue is to just assume that FIRPTA applies every time and that your seller is foreign and get them to tell you that they're not. Is that fair? Is that a fair way to explain that?
That's totally a fair way to explain it. And I want to make a similarity with my Maine real estate agents that this is very similar to our Maine withholding. So if you're not a resident of the state of Maine and you sell property, then there's a 2.5% withholding. So you ask that question, are you a Maine resident? You ask the questions, and I think that maybe there's just a little less stigma around saying, are you a Maine resident or a New Hampshire resident, as opposed to getting in. And it's definitely more complicated when it comes to FIRPTA. But if real estate agents kind of want to draw on something they're a little more familiar with, that Maine withholding tax is similar. And you have to ask the questions that either make the tax apply or exempt them from the tax.
Yeah, I think that's actually really smart. Not every state has a state withholding, and I'm familiar with the state withholding in Maine. And you're right, it is very similar. It's just when you say non-resident for Maine, it just means that you don't live in Maine. You could live in another state, right? When you say non-resident for FIRPTA, we're talking about any state. Are you a resident of the United States, anywhere in the states, or not? And you're right, it is one of those areas that is very complicated to determine. And sometimes, honestly, sometimes the sellers don't know either. They don't even know their own status. I had a gentleman call one time and he said, "Hey, I'm selling a property in Colorado and I don't think I'm foreign, but maybe I am, but I see this withholding and they told me to call you and can you help me figure out what my status is?" And I said, "Sure. Where were you born?" And he said he was born in Texas. So I'm like, "Texas, the state?" And he's like, "Yeah, Texas." And I said, "Well, that would make you a natural born citizen." He's like, "Yeah, I'm a U.S. citizen." And I said, "Well, okay, well, if you're a U.S. citizen, you can't be foreign. So why are you asking me if you're foreign?" And he said, "Well, I've just been living in Hong Kong, so I didn't know if at some point, I just become foreign for tax purposes." So here you have a natural born U.S. citizen that doesn't know what their status is, and he knows our tax laws, right? So imagine what it must be like for someone from another country who's not as familiar with our tax laws that also doesn't know their status. So having that conversation is so critical. And if you don't know how to have that conversation, then that's a perfect opportunity to bring in somebody like me because I know exactly the questions to ask. And then once the client responds, then I know exactly what the next step is for them. So when someone is a U.S. person, which means a U.S. citizen, a permanent resident with a green card, or someone who passes the substantial presence test, when they sell property, they have to sign an affidavit that they're not considered foreign. When they can't sign that affidavit, in theory, that's how we know that they are foreign. So The opposite of a U.S. person is a foreign person. And so when we're talking about individuals, we're talking about that perfect combination of a non-resident alien. Non-resident means they're not a resident of the states, and alien just means they're not a citizen. So a non-resident alien, that's who FIRPTA applies to.
I can tell you, for the most part, when that affidavit is signed at the closing table.
Yes. Which is great that it's being signed, but at the closing table is the worst time to find out that FIRPTA applies. And it happens so often. I wish it was an isolated, incident, but we just get phone calls every day from the closing table like, hey, we're closing in like 10 minutes and they just walked in and they don't have US passports, or they just walked in and they don't have a US ID. Like, what's going on here? And so we have to jump in on the fly and kind of get to the bottom of how that person is classified. And we have to have that conversation, and having somebody on speed dial where you can say, hey, this is a situation, what do we need to do? And someone can just make that assessment really quick on the fly would just be a, huge tool. I just want to say that, it can be really complicated. So, knowing who our seller is the crux of FIRPTA, right? Because FIRPTA only applies when the seller is foreign. But getting to the bottom of whether or not that seller is foreign or not is not always an easy task. And the scary part is that they put the onus on the buyer to figure it out.
Can you talk a little more about how that burden falls on the buyer, and give a little bit of information that it might make it a little more relative for people to understand, when somebody is getting income, and who's giving the income and why it does fall on the buyer?
Yeah, absolutely. So I think what you're referring to is the whole concept of a withholding agent. If you step away from FIRPTA for a second and you just look at U.S. tax laws in general, you'll notice a pattern. And when it comes to withholding is always going to be paid by the payer of the income, not the receiver of the income, but the payer of the income. So a perfect example would be a situation of an employer and an employee. So let's say I work for Walmart, and I'm working for Walmart and I make $500 a week working at Walmart. But when I look at my deposit, it's not $500. And that's because taxes had to be withheld. And the person or entity that had to do that was Walmart. Walmart had to hold taxes back from my pay and send it to the IRS as an estimated tax payment. And that's exactly how FIRPTA works. The only difference is foreign sellers don't get paid every week. They get paid when they sell a property. And there's no employer, but there's a buyer. And the buyer's paying this foreign seller. And because the buyer is the one making the payment, the buyer has to hold back the tax, and the buyer's considered the withholding agent. Now, from a practical perspective, obviously, sometimes there's a title company or a closing attorney or somebody like us that's facilitating that withholding process. But at the end of the day, it's the buyer who's responsible to make sure that FIRPTA is handled right.
One thing that I thought was really interesting when I heard you speak at the FATIC seminar was that everybody's instinct, for the most part, is to figure out how they do not have to pay the FIRPTA, and that sometimes triggers other consequences.
Yeah. So, who wants to pay taxes? Nobody. But sometimes real estate agents like to be creative. And sometimes that works to their advantage and sometimes it doesn't. But there are things that people are doing specifically, they're transferring property to US people. They are, adding people to their LLC. They are changing their classification from an LLC to a C Corp. They're, doing all these things to avoid FIRPTA. And one thing that they don't realize is that, okay, yeah, maybe you can get out of FIRPTA. There's no guarantee. Maybe you can get out of FIRPTA, but a lot of times they end up in a worse situation than they started. For example, I had a real estate agent a couple years ago that was working with a foreign seller. That foreign seller owned property in an LLC. They were the only member of that LLC. And so that LLC was treated as a disregarded entity. And so for tax purposes, there's literally no separation between the entity and the owner, right? so that when the property was being sold, because there's no separation for tax purposes, we have to look at who the owner of that LLC is, and that LLC, that owner was foreign. They were a non-resident alien, didn't live in the U.S., had no citizenship here. So FIRPTA applied to that transaction. Well, the real estate agent said, oh, hey, if we make an election, if you ask the IRS to treat your LLC like a corporation, then it'll be classified as a U.S. person. You don't have to worry about FIRPTA. Let's do that. And so they went through this process. They filled out the application. They waited the appropriate amount of time. The IRS approved the classification, the reclassification, if you will. And now this LLC is treated like a corporation. Well, corporations formed in the U.S. are classified as a U.S. person. FIRPTA doesn't apply to them. But what the real estate agent wasn't thinking about was the tax implications. So corporations pay 21% starting on the very first dollar of profit, of gain. And so she ended up costing her client tens of thousands of dollars in capital gains tax that would have been exempt had she left it the way that it was. So she got her client out of this temporary tax withholding situation that seller probably would have got a majority of that money back, if not all of it, and ended up costing her client actual tax dollars that is not refundable. So it was a really bad move on the real estate agent's part to suggest that, because had they just dealt with FIRPTA head on, it would have been a better outcome for that seller. But she was so focused on getting them out of FIRPTA that she wasn't thinking about anything else. She had blinders on.
So that's the other point to make, is that this is a withholding. So
yes,
does not mean that it's gone forever in every case.
Yeah, it's a withholding tax, not a payable income tax. So it's almost like an estimated tax payment. When that money is collected at closing, it's sent to the IRS as a deposit against whatever capital gains tax that seller might owe. So if the seller doesn't actually owe any capital gains tax, they get a full refund of that money.
I really think that the message that I'm hearing in everything you're saying is deal with it, deal with it head on, and not try to skirt it or, be so confused about it. Which brings me to my next point. This is your thing. You do this day in, day out, and it's unreasonable for anybody to expect a title professional or a real estate agent to know the tax codes. I mean, if somebody asks me questions on capital gains at a closing, I always refer them to an accountant. FIRPTA, in my opinion, should be treated the same way.
Yeah, I absolutely agree, for a couple reasons. So, one of my things about FIRPTA is that, okay, yes, it's technical and it's tax and it's precise and it's this and it's that, but it's also emotional. There's so much emotion tied to this tax code. You have buyers that are afraid, literally fearful of being liable for this. They don't want anything to do with the seller's taxes or the IRS. All they want to do is buy a house or buy a property. That's it. And then you have sellers too that are terrified because they are worried that, are they ever going to get their money back? A lot of them don't even know that it's refundable. And so having somebody explain the process to them the right way the first time can set the tone for how the rest of that closing is going to go. I mean, I'm sure I don't know if you do closings. I actually worked at First American when I was younger, and so I've been around closings, and they can be contentious. Even under the best circumstances, they can be contentious. But then you start adding liability and taxes and this and the IRS and government and blah, 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 and it can make a really good deal fall apart instantly. And then they'll call and they'll be like, well, my agent said this. And then then it puts me in a bad spot because I'm like, oh, well, your agent doesn't know what they're talking about. Like, I would never say that. I don't ever want to throw anybody under the bus, but it's hard to backtrack from bad information and try to get them in a space where they can trust the process or trust us or even understand it. So that would be my 2 cents, is not only do you just not want the liability of explaining it wrong, but you just don't want to start off on a bad foot.
So much of this business is connecting clients to the right people
Mm.
and staying in your lane as far as what you're comfortable with explaining, and not hoping that you're giving the right answer when there are true consequences financially and in building trust, like you just explained. And I don't think we expect anyone to walk away from listening to this episode and have FIRPTA down pat. What would you want a real estate agent or a real estate professional, title company, whatever it may be, what is the key thing that you really want them to go away from this episode knowing when it comes to FIRPTA?
I would want real estate agents to know that they have a resource. There are people in this space that are really making a difference and making the process easier and making it more transparent and making it more affordable and making it more streamlined. And that when they do go on a listing, if there's even a hint that FIRPTA might apply, I don't know how it works with everybody else, but they can call me. They can call me and say, "Hey, I'm at a listing appointment. If you have a second, let's talk about this. My seller has some questions." And being able to answer those questions and iron out those details can sometimes be what tips the scale in getting you that listing, because sellers don't expect, and this is my experience, so I'm speaking from my own personal experience in this space, is sellers do not expect their agents to be experts in FIRPTA. They tell it to me all the time. All they want to do is be informed. And when something does go south, when something does go wrong, the very first thing that a buyer or seller will say is, "My agent never told me. My agent never told me. My agent never told me. I'll never use them again. This has been the worst experience of my life. They didn't tell me what was going on. I didn't know what to expect." And so just having someone like us in your toolbox, just saved in your phone as FIRPTA lady, whatever you need to do, and just sending a text or sending a message or having somebody, even if it's not us, having somebody that understands FIRPTA and understands the process, that you can have on speed dial, that you can get your clients in front of instantly. Please don't wait to the very last minute to figure out that your seller is foreign, or to figure out that FIRPTA applies, or to figure out that, the buyer's not going to cooperate at the last minute. Those are all things that need to be discussed during the contract phase, not days before closing.
Well, I appreciate your time, Julie. I know that you have another appointment, so the fact that you took time to come on and speak with me and give all of this amazing information, I am going to put all of your contact information in the description of the podcast so people can reach out. And I'm getting the feeling here that you're very happy to speak with real estate agents and sellers to explain the process and to answer their questions. And I think that would take so much of the confusion and the angst out of how people feel around this whole FIRPTA situation.
Yeah, absolutely. It only takes a handful of transactions and a little bit of handholding to get agents to the point where they are feeling more confident. I guess in the whole, grand scheme of things, my goal would be to get real estate agents so comfortable with how FIRPTA works and knowing that we've got their backs, that they go out and they procure this business, not run from the business, but actually use it as a way to increase their market share, be the go-to real estate agent for foreign sellers, that you don't shrink back, that you are holding a sign that says FIRPTA here, that you're not afraid of it, and that you can use that as a way to grow your business.
In this business, it's very competitive, it's very tough, and if you can find that lane that you can get comfortable with and have the professionals and experts behind you. Well, thank you so much, Julie. I appreciate you coming on again, sharing all this information. And we just scratched the surface on FIRPTA, but I at least want to start the conversation, and maybe we can plan this again and get a little more in depth after we get some feedback from the episode.
Yeah, absolutely. If anyone asks any questions, maybe we can do an FAQ podcast to some of the more common requests and common questions that you get.
Thanks so much, Julie.
Yes, ma'am. Have a great day.
You too. We hope you've enjoyed this episode of Behind the Title, the official podcast of Trilogy and Baldacci Real Estate Closing Services with your hosts, Bobbie Grenier and Jessica Mung. Remember, this podcast is for informational, educational, and entertainment purposes only and not intended as legal advice. Please remember to follow and rate the show and share this episode with a friend.